Yo, listen up. Bitcoin didn't just dip, it straight up erased $19 billion overnight like it was nothing. Charts are bleeding, Twitter's on fire, and everybody's screaming crypto's dead like we haven't heard that 1,000 times before. But let me tell you something the news will never say. Every time this kind of crash happens, millionaires are quietly being born in the background. Because history doesn't lie. The biggest runs in crypto always start right after everybody else panics. Here's what actually went down. Bitcoin took a sharp drop, wiping out billions in longs within hours. Leveraged traders got smoked, liquidation candles flying everywhere, and the media instantly jumped in talking fear, regulation, global tension, same script, different day. Retail investors lost their minds, spamming panic tweets, selling on emotions. But the crazy part? While the crowd was melting down, the whales were silent. No panic, no noise, no complaining. Just sitting still or buying quietly. And that silence, that's a red flag, in a good way. Because when retail screams and whales stay calm, the game is being played behind the scenes. But hold up, crashes don't just appear out of thin air. There's always a trigger. Something or someone pulled the strings. So what caused this one? Let's be real. This wasn't just, oh, the market got weak. Nope. This was a calculated liquidation event. Too many people got overconfident, stacking leverage like Bitcoin was guaranteed to moon without resistance. The market makers saw that greed and said, bet. Then they nuked the price just enough to wipe out all the degens, collect their money, and reset the chart. It's a cheat code they've used for years. Shake out the weak hands, scoop up cheap coins, then send it back up when no one expects it. Now here's the crazy part. While everyone thinks this crash is the end, the data says the opposite. Long-time holders aren't selling. Big wallets are growing. Exchange reserves are dropping. And historically, when Bitcoin dips hard during accumulation season, that's when the explosive moves happen next. The people crying now are the same people who'll FOMO back in when Bitcoin hits a new all-time high. Don't be that guy. So the real question is this the moment to run or the moment to buy with strategy? Because smart investors don't react to noise, they react to opportunity. And right now, opportunity is screaming. But before you throw your money in blindly, chill. There's one more thing you need to know. Crashes are dangerous if you don't understand the master plan behind them. You need to know exactly who triggered this, why they did it, and how they're planning their next move. Because if you can think like the whales, you'll stop being their victim and start being on their team. And I'm about to expose the real cause of this crash, the part nobody on mainstream media is talking about. Ready? Let's go to the next level. Yo, listen up. Bitcoin didn't just dip. It straight up nuked $19 billion overnight and the whole market went into panic mode. Twitter went crazy, news channels started screaming crash, and every newbie holder was smashing the sell button like their life depended on it. But here's the wild part. Every time Bitcoin has done something like this in history, it wasn't the end, it was the beginning. This is the same kind of move that turned early buyers into millionaires. So the real question isn't, is this over? The real question is this the biggest buying opportunity of 2025? Because I'm telling you, something big is cooking behind the scenes, and you do not want to miss this. First, let's keep it simple. Bitcoin fell hard, liquidations were firing off like fireworks, billions wiped in hours. Leveraged traders got smoked instantly. One wrong move and boom, accounts gone. USA media started pushing fear like always, talking about the bubble popping and crypto winter coming back. Meanwhile, Twitter became a war zone, half the people crying, the other half screaming, buy the dip. But the loudest sound? Silence. Whales weren't saying a word. And when the big boys go silent, that's a red flag. Because silence means they're planning something. Retail is panicking, but whales don't panic. They calculate. Now think about it. Crashes don't just come out of nowhere. The market doesn't fall billions without a trigger. Something or someone pulled the strings. And here's where it gets spicy. Was it fake news? Was it manipulation? Was it institutions hunting stop losses again? Because let's be real, Every major dump in crypto history had a deeper reason than what the headlines told us. The media just shows you the smoke, but I want to show you the fire. And trust me, you're gonna want to stick around for this next part, because if you think this crash was random, you're in for a shock. This wasn't an accident. This was a setup. And when you see who was buying during the dip, your whole perspective on this crash is gonna flip upside down. So hold up before you make any move, because in the next part, I'm exposing exactly what caused this crash and why the real players are treating this like a clearance sale at the Bitcoin store. Stay locked in. This is where it gets real.
Everybody's out here thinking this Bitcoin crash happened because the market is unstable or crypto is dying again. But nah, that's surface level thinking. Let's dig deeper, because the real reason is way more calculated than people realize. First thing you gotta understand, when the Fed even whispers about interest rate hikes, the whole market gets nervous. Higher rates mean money gets tighter, inflation fears kick in, global markets start shaking, and boom, risk assets like Bitcoin take a hit. But here's the thing, this isn't the first time. Every cycle, the Fed plays this game. They scare the market, weak hands dump, strong hands scoop everything up for cheap. Classic. But that's just one layer. The real dirt is in the manipulation. Whales straight up played chess, while retail was playing checkers. They pulled liquidity out of the order books on purpose, making the market super thin. So when a little selling pressure came in, price tanked way harder than normal. Why? Because when there's no liquidity, every sell hits like a nuke. And once price started falling, the domino effect kicked in. Enter the stop-loss hunters. These guys are ruthless. They know where retail places their stop losses, right under support levels. So what do? They push price down just enough to trigger those stops, instantly forcing millions of dollars in auto sells. That cascade creates even more selling pressure, and suddenly the chart looks like a disaster. Retail thinks, oh no, Bitcoin is dying. But in reality, they just got played. And while all this was happening, the news magically appeared out of nowhere with breaking, Bitcoin crashes due to global uncertainty. Yeah, right. That news didn't cause the crash. It was planted to justify it. The dip was engineered way before the headlines dropped. The media just gave you a reason to believe it was natural. But ask yourself, who controls the narrative? The same people who profit from fear. They feed panic to the masses while quietly filling their bags in the background. See the pattern now? This wasn't chaos. This was strategy. The market didn't crash. It got reset. The weak got flushed. The impatient got shaken out. And the whales opened the discount aisle. Because make no mistake, while regular investors were rage quitting and crying on Twitter, the big money wasn't scared for a second. They were waiting. They were watching. And when the perfect moment came, they went shopping like it was Black Friday. And here's where it gets crazy. I've got receipts. The on-chain data doesn't lie. Massive wallets were loading up during the dip. Institutions, hedge funds, ETF inflows, yeah, they were buying while you were doubting. So now the big question is, who exactly bought the dip? Because once you see the names and the size of these buys, you'll realize this so-called crash was actually a setup for something huge. Stay with me. This next part is gonna blow your mind.
All right, let's get real. While the average trader was panicking, crying, and rage selling their bags, the whales were moving in silence like ninjas. The charts looked bloody, but on-chain data was telling a completely different story. Wallets holding massive amounts of Bitcoin started accumulating like crazy. I'm talking millions flowing in while everyone else thought the market was dead. The blockchain doesn't lie. Addresses with 1,000+ BTC went up during the crash. That means the big dogs weren't scared. They were hungry. And it wasn't just random whales. Look at the institutions.
Coinbase was quietly reporting massive inflows. BlackRock and Fidelity, yeah, the same guys who manage trillions, were scooping up Bitcoin through their ETFs, while retail holders were panic selling on mobile apps. Think about that. The richest, smartest money on earth is buying the asset that the average person is dumping. You really think they're doing that for fun? No shot. They know something. They have data, connections, and market insights that we will never see. And when they strike during fear, it's never by accident. This is classic smart money versus dumb money psychology. Dumb money buys late when the hype is high and sells early when fear hits. Smart money does the exact opposite. They wait for the market to overreact, they let the weak hands get washed out, then they press buy while the price is on sale. It's like a rigged game. Retail plays emotionally, whales play mathematically. And the crazy part? Retail never learns. Every cycle, same story. Crash, panic, dump, regret. While whales double their holdings and laugh all the way to the bank. And don't forget the USA hedge funds. These guys live for discount season. They don't buy tops. They don't chase pumps. They wait for bloody red candles because that's where the real money is made. They call it value entry. We call it buy the dip. Same thing, different suit. When the market looks scary, that's when they're loading up like it's Costco. They know Bitcoin isn't going anywhere. Adoption is rising, ETFs are approved, halving is coming. Long term, this thing is a rocket. But rockets don't go straight up, they refuel first. And this crash, that was the refuel. Now here's what really blows my mind. People will watch hedge funds buy, watch institutions buy, watch whales buy, and still say, I don't know if I should buy. Bro, if the smartest money in the world is loading their bags, what are we even questioning? These aren't gamblers. These are billionaires with teams of analysts, algorithms, and data we will never see. If they're buying fear, maybe fear is the wrong emotion. So if the big dogs are loading up like the bull market is just beginning, the real question becomes simple. Should you be doing the same? Is this actually the perfect entry before the next breakout? Because in the next part, I'm breaking it down brutally honest. No hype, no fluff, just facts. Let's find out if this crash is the golden ticket or a trap. Let's keep it a buck. Every time Bitcoin crashes, people scream that it's over. But history keeps slapping those people in the face. Go back to 2015. Bitcoin nuked. Everyone said it was dead. What happened next? It went from a couple $100 to nearly $20K. Fast forward to 2018. Market collapsed, YouTubers vanished, crypto Twitter went silent. Boom. 2020, 2021 bull run took Bitcoin to $69K. Then 2020 crashed during the pandemic. Bro, people were dumping Bitcoin like it was worthless. Smart money loaded up, and it became the biggest bull run in crypto history. See the pattern? Every major crash is followed by a monster rally. Not sometimes, every single time. And here's the crazy part. Right now, we're in the exact same setup again. The halving cycle is still active. Historically, Bitcoin pumps the hardest after the halving, not before. The supply just got cut, demand is rising, ETFs are pouring in, governments are paying attention. This is literally the most bullish environment Bitcoin has ever had. Yet people are scared because of a dip. Nah, this isn't the end. This looks like the reset before takeoff. You know that quote, buy when there's blood in the streets? Yeah, Warren Buffett wasn't talking about crypto, but the logic is the same. The best opportunities don't show up when everything feels safe. They show up when everyone is scared, when the market looks ugly, when nobody wants to touch it. That's when millionaires are made. Because value isn't found at the top. It's found in the chaos at the bottom. And right now, there's blood everywhere. Translation, discount season. But I get it. Some of y'all are thinking, do I just go all in right now, or do I play it smart? That's where strategy comes in. You don't need to drop your whole bag in one move. Dollar cost averaging is a beast move. You stack slowly, buy small chunks on red days, and let time do the work. But for the savages out there who believe in long-term Bitcoin dominance, some people go full send. And guess what? Historically, both strategies have made insane returns if you simply buy when everyone else is scared. The point is simple. Buying at the bottom has always been the cheat code. And everything I'm seeing right now looks like one of those rare moments the market gifts you. Limited supply, institutional demand, fear at maximum. This setup is too familiar to ignore. If you miss it, you'll regret it when Bitcoin sends to new all-time highs and everyone suddenly turns bullish again. Don't be the person buying at 150K when you were too scared to buy at 90K. But hey, let's keep it real. I'm not here to sell you dreams. I'm here to give you the truth. And the truth is, even though this setup looks insanely bullish, it doesn't mean it's risk-free. So before you smash that buy button and start flexing future profits, we need to talk about the dark side. Because yes, there are risks, real ones. And if you ignore them, you could still get wrecked. Okay, this sounds bullish, but wait, there are risks. Let's be real for a sec.
All right, let's not sugarcoat it. Even though this dip looks like a golden ticket, there are real risks that most people ignore until it's too late. First off, Bitcoin can still drop further. Just because we hit a support level doesn't mean it's unbreakable. The market loves to fake people out. Bounce a little, make you think the bottom is in, and then boom, another leg down. We've seen it 100 times. The whales know exactly where retail thinks the bottom is, and they will gladly push price lower just to shake out the last weak hands. So don't be blind. Always leave room for one more drop. Then we got the U.S. government playing games, regulation drama, SEC lawsuits, stablecoin talks, and let's not forget the election coming up. When the election cycle heats up, Bitcoin becomes a political football. One candidate says crypto freedom, the other says crypto crackdown, and the market reacts instantly. We've seen bills get introduced that spook the market overnight. One headline can nuke the price. If you're not paying attention to what Washington is doing, you're trading with your eyes closed. Now let's talk about the ultimate account killer, leverage. Over-leverage turns normal dips into instant liquidation nightmares. One wrong move and your whole position is gone in seconds. And the crazy part, people keep doing it. They see influencers flexing 50x trades and think it's easy money. But the market is designed to hunt leverage. Exchanges literally profit when you blow up. If you're using leverage in a volatile market like this, you're basically handing your money to the casino. Real investors don't chase leverage. They use patience and proper entries. But honestly, the biggest risk isn't the market, it's emotion. Fear and greed destroy more portfolios than any price crash ever could. People buy the top because of hype, sell the bottom because of panic, then sit on the sidelines when the real move happens. They keep repeating the same cycle because they react emotionally instead of logically. If you can't control your emotions, this market will eat you alive. Bitcoin doesn't care about your feelings. It rewards discipline, not drama. Now, with all that said, let's flip the script. Yes, there are risks. Yes, you need to be smart. But if you zoom out, the upside is way bigger than the downside. Limited supply, institutional adoption, global demand. If you manage your risk, avoid leverage, buy smart, and hold through the noise, this crash could be the moment you look back on and say, that's when everything changed. The people who win in crypto aren't the lucky ones, they're the prepared ones. So here's the real question. How do you actually play this? Do you buy now? Do you wait? Do you stack slowly? If I had to start from scratch with just $1,000 in this exact market, what move would I make? Because I'm about to tell you my honest strategy, step by step, no hype, just facts. Let's get into it. All right, fam, let's wrap this up with some real talk. Crashes don't create losers, emotions do. The market doesn't care who you are. It doesn't care if you're a beginner, a pro, rich, broke, whatever. It only cares about one thing. Are you patient or are you emotional? because the people who panic sell at the bottom are the same people who FOMO buy at the top. They keep repeating the same cycle and then blame Bitcoin. But the truth is, Bitcoin didn't wreck them. Their mindset did. Look at every crypto millionaire story. None of them got rich buying when it felt safe. They bought when everybody else was screaming that crypto was dead. They bought the dips nobody wanted. They held while others cried. They thought long-term while others chased hype. That's the difference between winners and watchers. Winners move when it's uncomfortable, because comfort doesn't build wealth. Discomfort does. So ask yourself, are you going to panic with the crowd, or are you going to think like the whales? The whales aren't emotional. They don't care about Twitter fear. They don't care about short-term noise. They see value, they buy, they wait. Simple. Meanwhile, retail screams this time is different every single cycle. But history keeps repeating. The people who win are the ones who stay calm in chaos. I'm not saying go all in blindly. I'm saying think smart, move strategic, and stop letting fear make your decisions. If you truly believe in Bitcoin, if you truly believe in crypto's future, then dips like this aren't threats, they're invitations. And trust me, years from now, people will look back at this moment and say, I wish I bought more. The only question is, will you be one of the people who regrets it or one of the people who took action? And hey, if you want to go deeper, if you want me to show you an exact buy strategy, when to enter, how to stack, which coins I'd pick, how to manage risk, drop a comment saying buy the dip. If enough of you want it, I'll make a full breakdown video next and leave nothing out. Before you bounce, smash that like button if this opened your eyes. Hit subscribe if you're serious about making money in crypto 2025 and beyond. We don't do hype here, we do facts, strategy, and mindset. Because this market is only going to get crazier, and the ones who are prepared are gonna dominate. This crash might look scary to the weak, but to the smart, it's a doorway. So step through it. Stay sharp, think like a whale, and I'll see you in the next one.